Hi guys, John here, Forex Fire. I hope you have all had a fantastic weekend so far. So we are now going to be progressing a little bit more on to the homework sections. Okay, we're being stripping it right back. And the first week we done bankers candles. Last week we went over break of structure and things like that. Some fantastic chart markups, implementing both of the stuff together. From there, what I want to talk about this week is the Fibonacci. Okay, Fibonacci levels, and if you want to, you can sort of tie all this in together. So what we're going to do, this one will be short, sweet, and brief. I'm going to give you a little bit of an introduction on what the Fibonacci is about, what we look for in sort of price structure going into the fibs, how to draw it out, and what I expect to see on your charts for this week. Okay, this will also be in the modules, so if you want that little bit more extra sort of teaching with this, head over to the module and look for the Fibonacci's. I'm sure there's 2 videos on this, but at the end of this video as well, or you might be able to see it underneath this, there is a link below this. Okay, now we're going to be doing what we call a Forex Mastery Challenge. It's part of, because we are the stepping stone, and this is part of the bigger sort of picture, what we are part of. Okay, what I'm going to do, I'm going to drop that link underneath this video. So that's going to start from, it started today, I do believe, but it's over a course of 5 days. Okay, and it's going to show you the sort of stuff that not only that I do, but also what the bigger entity or the bigger picture I'm part of. Okay, and yes, we are all benefiting from what we have in here, but to scale your confidence level up, to scale where you are with your trading, to scale up to then start to have a plan and get it to a fully funded trader account, because you can go through the process of doing these prop firms. You just need to click the link below, submit your email into there, and there'll be some further education pushed towards your email with that. Okay, so without further ado, we're going to head over to the charts, have a look at what the Fibonacci's are about and what we look for and how we implement them on the charts. But if you can do, please click that link below, get involved in this 5-day Forex Mastery Challenge, which starts from today and then it continues for the next 5 days. Trust me, you're going to love what's inside of that. Okay, so I'm just going to share the screen. And as we can see, hopefully this mic's not getting in the way, we've got our fib levels. Okay, now on the fib levels, you can see I've got where I've drew, okay, where we've got, let's have a look, the candles. So the candles may start something like that. Okay, and I'll not color these in. You know how the candles are, but what we've got, okay, is that slight trend line coming down. Okay, in fact, that's a bad place to put the trend line coming down. Let's get that off, John. That there would be classed as a trend line. Okay, as it's bouncing down. Okay, and then obviously eventually, as price is moving, okay, so that's a trend line. Okay, it's bouncing down to respect that level. What we are looking for on the Fibonacci is when you're drawing this out, because we've got the downtrend, okay, we are drawing it from the top of the trend pushing down, and once you get a swing back, once you get a swing back, so once the buys become back into control and nothing's breaking this area here, you are doing from your swing high to the swing low points. Okay, now I want to take your attention to this area here. Okay, we've got the fib levels as the 1, which is where your base area starts from, whether it's on from the downtrend downwards, or if it's an uptrend, it's the 1 would start from the beginning of the swing point. We then have what we call the money zone. Okay, so the money zone, which is this area here, which is very important to us. Okay, it's a very highly respected area. This is an area where we look for price to come back to touch, to mitigate this area. And when it does, we are looking for the price to continue either on the down or the upward motion. So the fib levels are 1 on the top. Your money zone will comprise of a 0.786. Some people put a 0.81, but I have a 0.786 and a 0.71 as where more or less I have my entry. Okay, the half is just there so I know where we are with regards to the price movement between the A, B, C leg. I know what 50% of the A to B is. I use that in other methods that I trade, which I will show you over time. At this instance, it's not that important, to be fair. The 0 is either at the bottom of the swing point or the top of the swing point. Okay, these minuses here, these are our take profit areas. So as we've come up to mitigate the price here on our money zone, we would then be looking to be taking profits or partial profits as we head down into these zones. Okay, so just to talk a little bit more on Fibonacci. Okay, so if you can imagine, I'll get the magic wand out. Price has come out. We're here with price. Okay, now as we sort of come back in, we've got the swing point coming down, the swing point's coming back in. Each area of here is a zone. Okay, it's a discounted zone. So wherever you get in between this area, wherever you get in between that area, the deeper you come into that Fibonacci swing point, the more heavily discounted your price is. So it's a bit like the Black Friday sale. You're going out to get the best price available, and this is the same with Forex and the same with Fibonacci. Okay, so as the prices come out and you've got your swing point, you're waiting for the price, okay, to come back in to physically give you the best price. Now this price here is the optimum price with regards to working with smart money, the 71 to 786 or 71 to 86. Okay, so if you can imagine as well, we've got 2 bands, and this is where I go about this halfway point as well. So a lot of people use a 618 as well. So you've got 2 areas here. Okay, and this is a better way to describe it. So if I fill that up with, let's see, red, and I fill this up with green, there's our money zone. I'll do the money zone as orange. Okay, so as we come down and we've got our swing high and swing low points, we are waiting for price to retract back into the between the 0, the half, and to the 1. Okay, the deeper this comes back into here, the better the discount price will get, the better the sale, the better value for money. Okay, so the red zone is, it's okay to trade from, but going from that is you're more likely to have a bigger stop loss with regards to where your swing high point is in this instance. Okay, so we are optimally looking for the price to come into the green zone. Anywhere into the green zone is fantastic. Where you need to be looking to getting in at is between the 71 and the 786. Okay, so those are the fib levels. So this would be what we would call, if you got in on here, this is the premium price. Okay, you're paying top dollar, you're paying full whack. Okay, this here is sale price. Okay, so this you're getting a fantastic deal for your money. Okay, let's get rid of that. This in the money zone, this is what I call the money zone. Okay, you get the money zone, you've got the right price, the right deal at the right price. Okay, so that's your money zone. Now, some people will actually wait until we not just get the 71, some people will wait for the 81 or the 786. Now, if you get that price and you've got a hell of a shorter stop loss, this here is what I would class as the Black Friday deal. Black Friday deal. That there. Okay, so that's going to give you the different areas of what I would call. When you get the retracement, you're just above the half to the zero. It's a premium price you're paying. As you're going deeper into the retracement of the fib, you've got your sale price, which is your half block. Okay, your 1 to your 0.5. You've got your sale price, and then you've got your optimal money zone. The money zone is the right price at the right time, the right deal. Okay, going in deeper and going in shorter, you could enter anywhere on the 786, the 81, and towards the 1. However, your stop loss will become shorter. Again, you get stopped out. It's not the end of the world. It just means you've had a shorter stop loss, to be fair. Some people will play around with this above area, but the optimal price and the optimum settings for me is the 71 to 786. Now, what I want you guys to do is, you'll notice this chart. This is mine from last week. Okay. Now, I want you to identify still the downtrend. Okay, you've got the downtrend. And I've told you here I had the double bottom. Okay, we had liquidity. I also did the breaker structure. Okay, we want you to sort of put in the breaker structure like we've got here. I identified that. So then we had a low, we had a high. We come down, we made a higher low. I identified the bankers area where it's come down to retest. Okay, and I'm going to show you the power of these fibs in a second. And as we've pushed on the higher low, we've made a higher high because we've had another breaker structure here. Okay, now you'll notice I marked 2 areas here seeing bankers. Okay, in all fairness, we possibly have 3 areas for bankers, and I'm going to show you why. So if we do from this swing point up to the breaker structure. Okay, now if I make that a little bit thicker, okay, and we concentrate into this area. Okay, now you see where the money zone is. Look at this, it's bang on what we would class. See that? Touched. It's come in, it's wicked into the 71, it's wicked into the 78.6. So this has hit a hit, in essence, our Black Friday deal. Okay, fantastic, right? So that was the first leg. Okay, so if we just get rid of that, and this is the power of the fibs. Now, as we've done that and we've made the higher high, okay, you are running your fibs from the 786 up to the new higher high. Bang, look at that. Now look where I identified the banker's candle, where we've come up on the push, we've touched, we've come back into retest the money zone. The money zone has been bang on. Let's just take a look. Once again, 786, Black Friday price. Again, fantastic. Now what I want you guys to do, if we just come out, I just want you, I mean, this is where the charts are going to get a little bit more messy or a little bit messed up. Try and make it as simplistic as you can. Show me where you've got a breaker structure, okay? But not only the breaker structure where you've got the swing points, I want you to draw the fibs. Let's back on a 1. I want you to draw the fibs for me, okay? And I want you to highlight the money zone, okay? Bit like this. Money zone, just to show me, you can see where there's been a retracement. and where the prices come to. So as we've come out on the higher high, we've come down. We haven't broken the structure from the previous higher low. We've touched the money zone, and then it's gone off for profits. Okay, so again, if you want to, you can add the long or the short, depending on which one you're doing, and you can show me where price has gone to. Okay, this one would have been a risk to reward of 1 to 3.81. So again, guys, what I'll do is that's it for the Fibonacci explanation and what I want you guys to draw. So that's draw out the chart like we did last week with the breaker structure, but I also want you to draw on there your Fibonacci level from a swing point, whether it's a swing low or a swing high to a swing low. Let me see that retracement and marked off to the money zone, okay, like this, and where the retracement came into, okay, and then where it shot off to on the TPs. That's your homework for this week. What I want you guys to do as well, if you're not already involved with the bigger picture of what we do, click on the link below with regards to the Forex Mastery Challenge. It's a 5-day event, okay? It's a 5-day event. Use the link below, submit your details, and we'll see you on the other side. Again, the guys that are already involved with the bigger stuff that we do, there's no need for you guys to do it because you'll already be part of what we're doing with that, but it will do no harm to put your email in there, to be fair, okay? So hit that link. Let's see your charts going into this week. We want the Fibonacci levels drawn up, the money zone, and the retracement from the money zone to a TP area, okay? See you later, guys. Thank you very much.